QuantumScape, or QS, is trending following its latest shareholder letter and Q4 earnings release, which triggered mixed reactions across the investor community. On one hand, the report reinforced ongoing concerns around cash burn, large operating losses, and the company's continued pre revenue status, fueling frustration among more skeptical investors. On the other hand, bulls are pointing to a long list of technical and commercial milestones that suggest QuantumScape is steadily progressing towards scalable solid state battery commercialization. A central focus of optimism is the Eagle Line pilot production facility, now commissioned and positioned as a blueprint for future manufacturing lines. Management described Eagle Line as a critical step to prove that QSE5 solid state cells can be produced at scale, and that the manufacturing process can be transferred to partners, aligning with QuantumScape's capital light licensing model. Many investors view this as a turning point from pure R&D toward an execution phase. Key highlights from the update that are driving debate are all 2025 objectives achieved, including Cobra process integration, QSE5 customer shipments, Eagle Line installation and commissioning, and additional OEM engagements. Customer billings reached $19.5 million in 2025, which bulls see as early validation of the company's licensing driven capital light development strategy. Adjusted EBITDA loss improved about 10% year over year to $252 million, with 2026 losses guided roughly flat at $250 to $275 million, signaling cost discipline but not yet a path to profitability. Capital expenditures stayed within plan at $36 million in 2025, with 2026 guided to a modestly higher $40 to $60 million range. Liquidity remained strong at $970.8 million, giving QuantumScape what management describes as a multi-year runway to execute its technology roadmap without a near-term capital raise. In addition to manufacturing progress, QuantumScape disclosed an expanded collaboration with PowerCo/Volkswagen, the addition of two major global automotive OEMs, and several new technology evaluation agreements. These updates have fueled speculation that more partnership announcements could follow as Eagle Line data matures. Another notable theme is management's push into new high value verticals beyond autos, including AI data centers, drones, robotics, grid storage, and consumer electronics. Bulls argue this diversification could dramatically expand QuantumScape's total addressable market if its solid state platform proves versatile. However, bears emphasize that no traditional revenue has yet been disclosed, and the $19.5 million in 2025 billings were recorded directly to equity due to related party accounting. For critics, this reinforces the concern that commercialization remains distant and that the company must still prove Eagle Line economics and real customer adoption. Overall, the quarter is viewed as mixed, strong execution on technical and commercial milestones, but still characterized by large losses and an absence of durable revenue. The core debate now centers on whether QuantumScape can translate Eagle Line success and billable development work into repeatable, royalty-like cash flows before its liquidity cushion eventually tightens.
So the stock lost 8.72% in the post-market session of yesterday, the 11th of February. So the stock has been showing a lot of weakness within a longer-term bullish trend. The bullish trend or the underlying trend is underscored by this 200-day moving average, which is sloping bullishly upwards. So the extrapolation was saying that today was going to be a down day, and that is what we are looking at right now. There's a good chance it will maintain this weakness in the regular session of today, the 12th of February. And it's saying here that it may remain in place. This weakness may remain in place up to Tuesday the 17th. After that, it might attempt to bounce, but it may not go beyond its 40-day moving average, which is declining. As a result of that, stock is expected to continue to trade below the 40-day moving average, at least up till the 16th of March. The 4-hour chart has reflected this weakness we are looking at right now, and here it's equally saying that You may remain lower prices are expected to continue to print up till midday today. Then after that, it might attempt to bounce, but wouldn't go beyond its 40 period moving average. So just as in the case of the daily chart, is expected to continue to trade below the 40 period moving average up till the 23rd of February. So we gathered the data from this 4 hour chart and we fed it to Claude, and this is what we have. Okay, let's see now. Price pressure momentums tell us what the moving averages are appreciating or losing, as the case may be. So this is refers to the 10 period moving average. This refers to the 21 period. This to the 40. This to the 200. So trend mode is from 0.25. So if a specific moving average is appreciating by 0.25, then we can say that it is trending. But now you can see the 10 period moving average. Given this weakness, it is severely bearish, dropping at the rate of $13.85 every day. Extreme bearish mode. All the other moving averages are equally bearish. So the stock is trapped between 0.876 and 0.867. These are its support values on its market grid. This is the market grid. It gives us a range of possible prices. But I have to point out that this will adjust later on. But as things stand right now, this is what's going on. The stock is trading below its market grid. You can see here. Yeah, it's trading below its market grid. Stock is in breakdown territory, trading below its entire support grid structure. So we have the various moving averages, and then there are probabilities of being retested, or yeah, those sort of things. 8.5, that 5% probability of it retesting, base support, critical reclaim needed. 8.58 to 25% initial resistance zone. 8.67, 18%, 8.76, 12%, 8.92, 6%, 9.01, 3%, low probability near term, 9.11%. So these are trade setups. They're not recommendations. Okay, if you apply them, you may not succeed. So bearish buyer setup. Okay, and this is if you are betting that lower prices may still print. Then we're looking at the prospects of 7.5 to 7.6 printing, even 7.94. Okay, the rationale for that is extreme negative price pressure momentum. Yeah, that's the 10 period moving average is declining by a huge amount, $13 every 4 hours. Okay, and the stock failed to hold their support at SXT. That value is at it failed to hold support at $8.5. That's the rationale, one of the rationales. All the derivatives are showing continued deterioration. The derivatives tell us the buying pressure and the pace of buying or selling pressure, and then and the pace of buying or selling pressure, as the case may be. So they are all showing continued their deterioration. Volume spike on breakdown suggests distribution. Okay, we can't exactly confirm whether that's a volume spike. Let's see, 19 million. Okay, yeah, above average. The usual average is around 15 million, 15 million, yeah. So it was quite a big day. But on the other hand, given that the stock is also trading below its grid structure, yeah, it's not out of place to expect a rebound. So entry will be around 7.9 to $8. Capitulation zone, your target will be 8.5. The support it couldn't, now with resistance, but then it was a support it couldn't hold. 35% probability, 8.76, 15% probability. Stop loss will be $7. Risk reward is 1 to 2 to 1 to 2.5. Rationale: oversold conditions with 9.51% single day drop. Potential dead cat bounce to 8.5. New catalysts about Eagle Line could spark a relief rally. Long-term trade setup, 30 to 90 days. Okay, so strategic accumulation zone, 7.5 to 8 $0.2, scaling. Your target will be 9.1, second target 10 to 10.5, stop loss will be $6.8, critical support failure. So 10.5 is around where 10.7, okay, this is close to where the 40 period moving average is right now. Probability is at 20%. Okay, this is 9.1 is one of its resistance prices at the moment. Okay, bullish scenario requirements. Okay, the 10 period moving average must flip positive, must get into trend mode. At most, must get okay, flip positive, not essentially trend mode. Okay, just get positive. That's what it's just indicating. Currently, severely bearish. Monitor for reversal signals. Reclaim and hold SXT. It was a support then, now it's a resistance 8.5 for 3 consecutive sessions. All right, okay. Volume supported above 8.65. Okay. Positive catalyst from Eagle Line pilot production or OEM partnership announcement. Okay. Probability assessment. Bull case to 9.1, 25 to 30% without major catalyst, 45% with positive OEM news. Range bound 7.5 to 8.5, 40%. Okay. So risk factors, pre-revenue status with ongoing cash burn, all moving averages in bearish mode, no active Fibonacci upside targets. Yeah, that's another issue. The extrapolation of its moving averages, the 3 and the 40 period moving averages, 8.5 and 8.84 sideways to slightly down. Actionable conclusion for active traders, the short-term bearish setup offers a better risk reward. Wait for either breakdown confirmation below $8 for momentum shorts, capitulation volume spike near 7.9 for bounce play. For long-term investors, current technical damage suggests waiting. Deal accumulation will begin if or when the price, the 10 period moving average, the price special momentum. That's when that 10 period moving average begins to appreciate, and it's only losing. It's appreciating, and maybe the threshold is just losing only $5 or better. Then showing it's obviously an indication that deceleration. So the decline is decelerating. Okay. Price reclaims 8.5 dollars. Positive OEM partnership announcement provides a fundamental catalyst. So bottom line, the probabilities favor caution. The technical structure is compromised, and without a fundamental catalyst to reverse the negative price pressure momentums. Okay, the path of least resistance remains lower toward 7.5 to $7.9. Okay, so just see what you make of QS stock, and thank you very much for watching this video.